Hi everyone. Financial success is always a tricky term because depending on the culture that you're from, financial success can be very different. There are many metrics out there to measure financial success, and the one that I want to talk about today is net worth. For those of you who are familiar with finance classes, you'll know what net worth is just because it goes over several terms that people also use to describe companies. If you haven't been to a finance class, not a big deal. I'm going to break down every part just so we can all get a good understanding. It's easy, trust me. The first part of net worth is asset. As the term implies, it's usually cash or anything that can be converted to cash. Good examples of this is investments, such as stocks, such as real estate. Those you can sell to convert into money. On the other hand, there are assets such as valuable collectibles. If you have a really valuable action figure or really valuable Pokemon card, it does actually mean that you have assets that increase your net worth. You can also count your car if you have that. If you live in the city, obviously, you probably don't have a car. But otherwise, if you are not in the city, a car can be a valuable asset considering that used car prices are actually sky high. And some would say that it makes sense to buy a new car versus getting a used car depending on where you are and what prices look like. Assets are something that add to your net worth, right? It's good to have a lot of assets. Then there are liabilities. Liabilities are something that are subtracted from your assets. And liabilities are just like how it sounds. It's money that you owe to another entity. Now, this can be your friend that you owe money to. This can be a credit card debt. This can be a mortgage. Really, it's anywhere or anything that you might owe a debt to and a loan. Now that we have both of those terms defined, assets and liabilities, net worth is really just assets minus liabilities. Pretty straightforward. There's nothing too complicated about that. You can make it more complicated if you want. Again, we're looking at only one metric for financial success, so it won't be perfect, but it'll give you some sort of idea about how you are doing compared to other people or really compared to yourself a few years back. If the metric for net worth still doesn't make a lot of sense, let's go over a few examples. If you have a lot of assets and very little liabilities, I think that a good majority of us can say that's considered a financial success, right? It just means you have a lot of money and you don't owe anyone money, right? Or you owe very few people money, so your net worth is going to be much larger. If you have a lot of assets, but you also have a lot of liabilities, then it depends, right? What are those liabilities? Are those liabilities mortgages with homes where you have revenue generating assets? Then it's great, right? Considering that, sure, you may have a lot of liabilities and sure, you may have a lot of assets. It doesn't look great on paper. But if you're making passive income on those liabilities every month or every year, it really depends on how many liabilities you have and how many assets you have and how those liabilities contribute to your financial wealth. If you have low assets and a lot of liabilities, that's a little tricky because it means you have very little money on hand or in any convertible investments, and then you have a lot of debt. That's not great. It's not the end of the world, but it's not great. A good example of this actually is if you are a student, chances are, and you graduated, chances are you're actually graduating with a lot of student debt, somewhere around 30K. You're going to fall into this category of low assets and high liabilities, at least until you either pay off those loans or you make so much money in assets and you accumulate assets that those liabilities will pale in comparison. But remember, at the end of the day, you are the judge of your success, right? Try not to compare your net worth to all the billionaires or even millionaires. Everyone has a different time in life, and you need to figure out what your net worth is today and how it looks like maybe tomorrow, maybe a few years from now. And that will give you a good metric and a goal to aim for. Let's look at an example of net worth over time. You guessed it, I'm going to go over my net worth over time. The trick is that I'm not going to show you what those numbers are. To be completely transparent, I'm just going to show you a line graph, right? The goal of this line graph is to show you how I accumulated net worth and assets over time and also accumulated liabilities. Every month, I record my net worth on a spreadsheet. I know, seems like a pain in the ass, but it has to be done to give a good idea about where I am tracking financially. But hey, the numbers are hidden now, but who knows? Maybe I will review them if you stick around long enough. So if you subscribe, you might see real numbers soon and you'll get a better idea about my track record for financial success and what my net worth looks like during a moment in time. And I know even though I'm saying, hey, there's no numbers here, there's just a line graph, someone out there is going to try to calculate it, trying to guess it, figure out, hey, what was Alan's net worth at this point in time? If you watch my student loans video, you'll know what my net worth was at 2017, but it's still going to be very hard to sort of guess where I am today or where I am in different moments in time. But you can try. Your net worth is actually a very important tool, not only to track your financial success, but also to paint a picture for your life. It can actually tell you what financial events occurred throughout your life just because you accumulate liabilities, you accumulate assets as you go along. Like I mentioned before, in 2017, I just started my career and I started making money. And a year before that, I basically had almost no money, and most of it was financial aid, scholarships. And since I come from a low income family, there was no handout of any kind really. And once I started working, from there on, I just invested pretty much all of my money with the exception of the emergency fund. So you'll see how it slowly accumulates over time. That's just my investments growing. If I put all of that money in a savings account, my investments will have grown much slower. So let that be a lesson to invest your money versus just putting all of it in a savings account. You can see the steady growth in investments in my assets up until around 2020 and going forward, just because we had recessions. The market recovered rapidly. The market is not very bumpy. And maybe it's going down, maybe it's going up, who knows? It basically is in line with the stock market. And if you watch my video about my favorite investment, you'll know what I'm invested in and why it fluctuates so much with that stock market. But it's fine. That was the intention, and it has made me a lot of money over this period of time. You also notice that the line for liabilities is very low. I've never had much liabilities in my life actually, just because I graduated with no student loans. I've had credit card, but those credit cards were always paid off in full every month, just so I wouldn't retain any credit card debt and impact my credit score. And then I went ahead and bought a condo, one of the biggest liabilities in my life. And then you can see how it just skyrocketed from there. Basically, at that point, I just started having to pay off my mortgage. And you'll see how my assets also skyrocketed because now I own a home. And that is calculated into the net worth formula. So you'll see that even though my assets jumped, my net worth line didn't just sporadically jump much higher. What really happened was that assets minus liabilities equals net worth. So assets was the home that I purchased, so the home value. And then liabilities was also that mortgage that I received from the bank to purchase the home. So they kind of just cancel each other out for now. Of course, over time, as I pay off more of the mortgage, the liabilities line will go lower and the asset line will go higher as property appreciates. But even after all of that, history of my net worth, you'll see one thing. My assets generally trend upwards. That's a good sign. My net worth also trends upwards. The ideal is to have your net worth trend upwards along with your assets, and liabilities trend either flat or downwards, right? Depending on what your goal is. If your goal is to create a lot of revenue generating assets, you might have a lot of liabilities as a result of that. And that's fine, right? Like I said, net worth is only one metric of success, and it won't give you the complete picture, but it'll give you a good idea about where you stand financially if you don't have any experience with metrics for personal finance. People always ask, what app should I use to track my net worth? Personally, I use a spreadsheet. In the past, I've used Personal Capital. Personal Capital was great, right? It had all these fancy line graphs, had all these fancy formulas and calculations that it did for you to figure out, hey, when can you retire? When do you want to pay off your mortgage? And so on, right? To just maximize your net worth. But that had some flaws too. Right. One big thing that I didn't like about Personal Capital was that it's a company that requires you to provide your username and password for all of your bank accounts and any credit card companies and so on. Like your financial accounts, you have to provide your username and password just so they can get all that data every day to give you sort of a real-time look at what your net worth is. Personally, I don't need that real-time look, and I didn't think that trade-off was worth a possible security breach, right? Just because you have all of your username and passwords stored in one application and one company, it's not a good idea. That just means that if the hacker can get into that one company, they have access to all of your financial accounts. I understand there's some protections in place, but better than having protections is to never share those financial passwords in the first place. So once I moved off of Personal Capital, I changed all of my passwords. To me, that one convenience of seeing all my data in real time wasn't worth the security trade-off. For other people, it might be. Right? It might be great to see everything in one spot, and that's all right. If that makes it easier for you, good for you. Otherwise, you always have the option of using a spreadsheet like me. Every month I go on at the end of the month, just write down all the data, log into all my accounts, and then I can see my net worth. Well, if net worth is one way of measuring success, then we want to figure out how to increase it. And there are a few ways to increase it, but the easiest one is just to increase your assets and make more money. If you are a salaried employee, the goal is to make more money, get higher bonuses, get a higher base salary, and so on. And by doing so consistently, you'll make more money. And then you will increase your net worth. And the obvious one is invest your money, right? Your money's not going to grow as fast as mine did if you didn't invest it, right? You need to put it into the stock market, you need to put it into real estate, whatever your preference is for investment, you need to do something with it. But if it sits in your savings account, it's going to be very hard for it to grow and it will be much more linear. And then there are liabilities. Like I said before, your net worth can increase if your liabilities also go up at the same time. It just cancels out your assets. When it comes to liabilities, in my opinion, you might want to make sure that you pay down any debt that has interest rates higher than 5%. The idea being is if you put your money in the stock market, on average, you'll make 7%. But 5% in debt means that you're losing 5% of that 7% that you're making. So you're really only making 2% because you had to pay off your debt while you're investing, right? So it makes more sense to pay off any high interest debts versus investing. Remember, paying off liabilities also increases your net worth over time. It's really a matter of approach. Do you want to pay down your debt first, or do you want to accumulate more wealth? If you just graduated, potentially you will have a negative net worth. In other words, your liabilities will be greater than your assets. And this is just because you graduated, you don't have a job yet, or you're just starting out in your career. And then you also have student loans. So your loans are probably gonna be much higher than everything in your checking account, your savings account. And this is not to say that it's bad, right? A negative net worth isn't bad, especially when you're starting out. It might be bad if you're close to retirement, right? Because you have no assets to retire. You basically can't retire. But if you're just starting out in your career, you just graduated, it's not a big deal. What it really means is that you have to focus on getting to zero. If you have a lot of student loans, you want to get to the point where your net worth is at least zero. In other words, you can start generating wealth from that point on. And sure, you will accumulate more loans in the future depending on if you want real estate, if you want to start a business. But that's okay because those types of loans are for revenue generating assets. If you decide to use your credit card to buy something you don't need, then maybe that's not a good idea because then liabilities will increase and your assets will pretty much go down or stay the same. Net worth is only one measurement of financial success. There are other measurements, but it's a good beginner measurement because it's so easy to calculate, right? All the money I have subtracted by all of my liabilities, right? So it's pretty straightforward. And from there on, you can see how it improves over time if you're really working on improving your financial life. Hopefully this will give you a good idea about where you stand financially and you can go calculate your net worth. I know it's a little bit tedious because you have to gather all the data, but once you have a system in place, it becomes much easier. It only takes me like 15 minutes to update my spreadsheets. All right, well, hopefully that was helpful and good luck on building your wealth. And I'll see you in the next one.
Here's a test. My wife recently bought this fancy coffee machine. Is this an asset or a liability? She's gonna be mad at me for asking this question. I'm just kidding. Don't be afraid to spend money to make yourself happy. Just because you're focused on maximizing your assets doesn't mean you shouldn't spend a single penny. Gotta enjoy life, right? Look at all this fancy equipment here. That's us enjoying life. Just so you know, I don't drink coffee, so this is just her enjoying life.